Wall Street, ASX set to slide lower, US stocks up. We're sorry, this feature is currently unavailable. We're working to restore it. Please try again later. The Sydney Morning Herald. The Sydney Morning Herald. Sections. Network. Advertisement. Updated. Business. Markets. World markets. ASX rises despite weaker than expected Chinese data. Telstra gains. By Millie Merwar. Save articles for later. Add articles to your saved list and come back to them anytime. Advertisement. Welcome to your 5-minute recap of the trading day, and how the experts saw it. The numbers. The Australian share market finished in positive territory on Wednesday, with technology stocks making up for weaker miners and energy companies, which fell on the back of a dip in oil and iron ore prices. The S&P ASX 200 closed 18.3 points, or 0.3%, higher at 6,995.4, with all sectors except energy and materials trading in the green. The Australian dollar was weaker, fetching 64.33 US cents. It slumped on Tuesday after the RBA raised interest rates but softened its tone on possible future rises. Tech companies drove Wall Street higher. Credit, Bloomberg. The lifters. Information technology companies, up 1.9%, were the strongest on the local bourse, with Wise Tech climbing 2.3%, Altium adding 2.4% and Xero increasing 1.5%. Telstra, up 1.3%, bolstered the communication services sector, up 1.4%, following a nationwide outage affecting its biggest rival Optus. Building materials maker James Hardie Industries jumped 13.8%, making it the biggest large-cap advancer. The company reported a 2% rise in quarterly profits after raising prices for its products, and predicted a rebound in home renovations next year that would boost demand. The laggards. Miners, down 1.1%, were among the weakest on the local bourse following a slide in commodity prices as Chinese economic data came in weaker than expected. Iron ore giants and market heavyweights Rio Tinto, down 2%, BHP, down 1.9%, and Fortescue, down 1.1%, all declined. Gold producer Newmont, down 4.7%, BHP spin-off South32, down 4.3%, and lithium miner Eagle, down 2.4%, were also weaker. Advertisement. Energy companies, down 0.2%, were also softer, with Woodside shedding 0.6%. The lowdown. Novus Capital senior client advisor Gary Glover said the market had bounced impulsively off a late October low. Seasonally, the September to December period is a weak spot for all stocks, he said. There's a few negative things happening, but the market has taken the Reserve Bank's rate hike in stride. Glover said several sectors had experienced a turnaround in the past week. The healthcare sector, which was one of the worst performers in the last 12 months, has had a big recovery, he said. And investors are also seeing value in the property trusts, which have been the weakest sector in the last 2 years. Overnight on Wall Street, US stocks ticked higher, absorbing the big swings that have shaken financial markets recently. The S&P 500 rose 0.3% to 4,378.38, as gains for some big tech stocks helped offset losses for the majority of stocks in the index. It's the second straight quiet day for the index after months of heavy losses swiveled sharply to a rally last week, its best of the year. The Dow Jones added 0.2% and the Nasdaq Composite gained 0.9%. TripAdvisor jumped 11% after reporting better results for the Northern Hemisphere summer than analysts expected, while Emerson Electric sank 7.4% after falling short of expectations. The majority of big companies has been topping estimates so far this earnings season, but another factor has been much more influential in driving the stock market's big swings since the summer: the bond market. Treasury yields there eased, with the 10-year yield falling to 4.56% from 4.66% late on Monday. Fed Chair Jerome Powell cautioned last week that more rate hikes may still come if the rise in Treasury yields does not stay persistent. Another Fed official, Governor Michelle Bowman, said on Tuesday that she still expects the U.S. central bank will need to raise interest rates further, but she voted to hold them steady at the last meeting in part because the outlook for the economy is so uncertain. She also said it is still too early to know how the recent run higher in Treasury yields will affect the U.S. economy and inflation. More speeches by Fed officials this week could prove to be the biggest movers of financial markets, with relatively few high-impact economic reports on the calendar. Depending on what Fed officials say, that could portend a quieter week for financial markets, which have had quick triggers. Shares of WeWork were not trading after the office-sharing company filed for Chapter 11 bankruptcy protection. It's a stunning fall for the company that had promised to upend the way people went to work around the world. After earlier being valued at $47 billion $73 billion, its stock has plunged 98.5% this year. In the oil market, crude prices tumbled to continue their own sharp recent swings. A barrel of benchmark US crude dropped $3.45 to settle at $77.37, back to where it was in July, before the outbreak of the Israel-Hamas war a month ago raised worries about potential disruptions to supplies. Brent crude, the international standard, lost $3.57 to $81.61. Oil prices fell as worries continue about how much fuel the world's second-largest economy will burn. China said its exports fell 6.4% in October from a year earlier, the sixth straight monthly decline, while imports rose 3%, the first such increase in over a year. The trade surplus fell to $56.5 billion United States dollars. Stocks fell 1.6% in Hong Kong and by less than 0.1% in Shanghai, joining losses across much of the rest of Asia. Drops were more modest for stock indexes in Europe. Tweet of the day. Quote of the day. The more Australians support us by buying Sara Lee, the better, given it's such an iconic Australian frozen dessert business, said FTI Consulting Voluntary Administrator Vaughan Strawbridge, encouraging Australians to buy more frozen desserts as he fields interest from about 60 parties that are considering taking on the iconic brand and the $55 million sum owed to creditors. You may have missed. Consumers are increasingly relying on credit cards to make ends meet while interest rates and annual fees on many cards are rising, raising fears of a debt hangover ahead of the Christmas spending period. With app. The Market Recap newsletter is a wrap of the day's trading. Get it each weekday afternoon. World markets, shares, bonds, most viewed in business. From our partners. Advertisement. The Sydney Morning Herald. Twitter, Facebook, Instagram, RSS. Copyright 2023.